Tech Trends 24/7 Leaders is a passionate podcast hosted by James P. Quinn on technology innovation. It provides insightful interviews with key and inspiring innovators in areas of corporate technology, office of the future, AI, real estate, sustainability, assistive technologies, and other emerging technologies. Tech Trends 24/7 Leaders will smartly position you where your business, life, and industries are moving for the future.
Andrew Batson is the head of data center research and strategy for the Americas at JLL. Andrew brings a wealth of expertise in commercial real estate with a focus on data centers, property management, and alternative assets. With 16 years of industry experience, he delivers crucial insights and analytics to clients and JLL's leadership team. His work encompasses sector analysis, industry trends, forecasting, and market share analysis. Before joining JLL, Andrew honed his skills as a research associate at the Center for Public Management, where he produced economic impact reports and strategic plans for various industries. Welcome, Andrew.
Andrew, welcome to the podcast. It's really great to have you today.
Great to be with you, Jim.
Do you want to just provide your roles and responsibilities in JLL in terms of how you're navigating our research component?
Yeah, Jim, happy to be with you. So Andrew Batson, I am the head of data center research for the Americas at JLL. I support our data center specialists across a variety of services at JLL, including brokerage, capital markets, financing, facility management, and broader kind of portfolio solutions. So my coverage is for the Americas, so North America, US, Canada, through Latin America, but JLL as a whole, we do have research capacities across APAC and EMEA.
So, I think this is timely. We're getting together, Andrew, because we published the 2025 Global Data Center Outlook. And, really some key areas. I think the first area, if we can jump in, in terms of it's in the papers every day, AI demand, you're seeing continued momentum in 2025. Just maybe you want to touch there and see some of the things that came out from the report.
Yeah, of course. So AI is just such a large component of the narrative around data centers right now. Although interestingly, only about 25% of demand of leases being signed today are AI related in co-location facilities. But nonetheless, just a huge narrative in the space. Dollars speak volumes. So, when I'm thinking about where is AI headed, where's the demand, you can just simply look at what are the top 4 tech firms doing in this space? Where are they investing? What are their CapEx levels? And over the last 4 years, it's been about $500 billion last year, and that's been increasing year over year. So last year was around $200 billion. And what the executives are targeting for 2025 is around $300 billion. Now that could change, but these are significant dollars that are allocated and laid out over multi-year data center development projects. So I think it'll continue to propel our industry for a number of years to come.
That's interesting. And I think that even with the announcement of DeepSeek yesterday and this week talking about that, I still really don't think could make an impact. But like you said, with all the significant investment that's going in, I think it's still going to continue to be vibrant. Do you agree with that?
Yeah, I would agree with that. Yeah, just to caveat, our talking today is maybe 48 hours into the news cycle of DeepSeek. I did put out an opinion piece this morning. I do think there is some transformational advancements in their technology and how they're approaching the learning components. There are questions around how many GPUs were used, but nonetheless, I think AI in general is in the very early years of a multi-decade journey. There will continue to be transformations, disruptions in the space. This will inevitably be one of those. But I think keeping all that just in context, I think is helpful.
Yeah, absolutely. And I know that one of the other areas the report talked about, rack density will continue to increase. Well, what are the findings there?
Yeah, so for your audience that's ingrained in this sector, this isn't necessarily news, but with increasing power densities and the GPUs, just the powers of the GPUs themselves, the amount of energy consumption in the racks will inevitably continue to increase, which as an output of that is a higher heat dissipation need, right? They're consuming more energy and pushing out more heat. The average rack density now globally is around, I want to say 16 kilowatts, but the latest NVIDIA GPUs that are going out have a rack density of close to 40. Right. So that right there's a significant increase, and it should double or triple again with the next generation of NVIDIA chips that come out. So they'll just be increasing heat generation in data centers. And on the back end of that, a requirement or a need for an evolution in how we cool and thermal management within data centers.
Yeah, no question. And one of the interesting things in terms of power that came about that, because it's very constant in the news that about data centers are really taking up a lot of the power, but the report basically said that we're only a relatively small part about it. You want to touch on that in terms of overall power demand?
Yeah, of course. So from a global level, data centers only represent about 2% of energy consumption today. Very small component, but growing fast, right? So I think some of the narratives steer a perception of data centers as currently a large percentage and growing to an ever larger percentage of overall consumption. So I think it's just helpful to center the audience in conversations around it is a small but growing component of overall consumption. In the US, currently data centers consume, I want to say 3, maybe 4% of consumption. And if we look out towards the end of the decade, that number likely doubles, call it to 6 to 8%. So still a somewhat small percentage, growing, but the global energy ecosystem is complex, and there are many challenges, of which data centers are one. For instance, air conditioning consumes more electricity globally than data centers do, and that is increasing with global warming. So there are multiple challenges in the energy space, data centers being one of them. There are multiple solutions that are being invested in that are emerging. So I think just a broader perspective needs to be given to the energy challenges that we all face.
Definitely. And then in terms of the power landscape, obviously there's not enough power, especially in very dense and popular data center markets. What did kind of the research say? What are some interesting things on the future challenges of power?
Yeah, so if I were to speak to the US grid is not imminently running out of power. There is a buffer of power capacity. The issue is data centers are getting larger and larger. So, a data center requirement today that's going out for 50 or 100 megawatts, it's hard to find that quantity in one space of electricity capacity, right? So that's an issue. But in addition to power or electricity capacity, there's also this issue of transmission, which is as equal of a challenge in the US and globally. By the way, Europe's grid is much older than ours. There are challenges there. The transmission is an issue. So even if you can find a site that's suitable for data center development, and that regional utility has power availability that they can contract, transmission, getting high transmission voltage lines to that site could take, we're quoting on average 4 years in the US now. I mean, that's just a significant delay, and we're talking millions and millions of dollars for data center operators and companies themselves in those time delays.
Yeah, and you bring up a good point about the 4 years because, we're right in the middle, and you have a good window pane of that, is that there's so many developers today that think they have land and they have potentially have a good power story. But really, when you drill down and talk to the local power utility, 4 to 5 years, that could be an eternity. So really, it's not initially what they think they have.
Yeah, that's fair. So I'll touch on two things. One, and you had asked this in a prior question, is this concept around clustering or the phenomenon where, data centers not evenly distributed across the US. It's not one data center every 100 square miles. There is a true clustering phenomenon that occurs in areas where there's a confluence of both land, power, infrastructure, primarily fiber optic, and the talent to operate and maintain data center facilities, right? In the United States, Northern Virginia by far is the best case study to reference around that idea of clustering, but there are many others that we touch on in our US and global reports. So that's that concept, just around clustering, which creates pain points. The second I'll mention is your idea of kind of land developers, or I'll even use the term land speculators. Yeah. There is a lot of interest in land and ultimately positioning that land, be it agricultural or others, for future data center development. So we have land speculators across the US who are acquiring rights to land and then going to power utilities and saying, I'd like to request 100 megawatts or 500 megawatts. And these are firms that have little to no experience in the data center space. And their requests are just overwhelming the power utilities, just overwhelming to the point where viable and legitimate data center projects with signed tenants, with experienced developers are getting stuck in this queue behind other requests for power. And it's just slowing the whole system down. So operators have been putting in processes, intake forms, requiring application fees, other checks and balances, if you will, to validate projects and kind of assigning rankings and pushing through at that point. So as an industry, I think that's hugely valuable. It should help clear some of the noise that's in the system in terms of power requests and help, I'm going to say accelerate, but kind of return viable projects back to a more normal development timeline.
Yeah, no, you're so right. There's one municipality where, probably like 18 months ago, the application was 50. Now it's 250. Just because they got, to your point, they got inundated and they're not equipped to be really looking at like 20 feasibility studies across the state. So I think you're spot on with your assessment. And then kind of alternative, power sources, you put in there enthusiasm for nuclear will continue. You want to touch upon that?
Yeah, happy to. So microgrids, off-grid data centers, this comes up very frequently in conversations. First, let me say that something like 95% of data centers today are receiving their primary source of power is from the grid. And the redundant power for those data centers is the diesel generator. So something like 5% plus or minus of active data centers today have an alternative form of power as their primary source. But given some of the power challenges that we've discussed, there is a lot of excitement, a lot of interest, a lot of investment in alternative sources. Some that are getting implemented today, fuel cells that we've helped some clients with. Additionally, you mentioned nuclear, so let's go there. A lot of headlines within the second half of last year on nuclear facilities, both existing, recently decommissioned, and then third, small modular reactors or SMRs. So we've seen some data center operators signing PPAs or power agreements with existing nuclear facilities, contracting for that power. We've seen a few recently decommissioned nuclear facilities. These are large scale, 1 gigawatt nuclear facilities that have plans to be brought back online over the next few years. 3 Mile Island is received a lot of attention. There's a similar facility in Michigan. There is one or two others. And then the third is around small modular reactors, right? So these are facilities that are, Oklo is one of the leaders in this space. Their powerhouse is scalable from 15 to 50 megawatts, right? So just to give some perspective there, they currently have a test facility under construction in Idaho, and they are targeting 2030 for commercial development. So there have been a number of megawatts signed, a number of PPAs with tech firms, with co-location operators that are seeing the potential in SMRs. I would just caution your audience that to a certain extent, this is new technology globally. It is for sure new technology within the United States. There is kind of a regulatory roadmap. There is kind of a societal acceptance roadmap, just a number of steps and checkpoints on a journey to seeing SMRs be commercially deployed at scale in the United States.
And what do you think the timeline is if you're going to have an estimate today?
It seems like we should see the first SMRs in or around 2030. We touched on this in the report. Most of these early contracts that are being signed, which are for the most part non-binding, I'll put that out there for the audience, are with the largest data center operators. These are hyperscalers and some of the largest co-location providers that are signing contracts. These SMRs will be deployed at first either at existing nuclear sites where the regulatory approvals are already in place or in rural areas. We touched on this in the global report. We do not foresee small modular reactors going into suburban or urban cores anytime in the foreseeable future.
Sure. Yeah, that makes sense. And then kind of switching gears, Andrew, what are your thoughts on the co-location market coming into the year in terms of where we are and where you think we're going.
Yeah, happy to talk about it. So I'm working now on our North American year-end report. So we should see co-location vacancy come in at around 3%. If I were to go over under, I'd say under 3%. Pre-leasing should be around 90%. So very, very strong demand, very low availability. Most availability is getting quoted out a couple years at this point. If you need anything of significant size over a couple megawatts. Still significant investor interest, primarily on the private equity side, providing equity on development deals as well. So strong interest. I mentioned this up front that AI is only about 25% of net demand now. It's important to keep that in mind, that data center demand is coming from a variety of industries for a variety of use cases. And we remain very bullish for the next foreseeable future, call it 3 to 5 years, on the co-location space.
Yeah. And then what about rates? How rates accelerated?
Yeah, great question. So rates have been going up in the mid-teens year over year for a couple of years now. So I don't have our year-end rates, but we foresee, call it 15 plus or minus 15% year over year rent growth continuing through 2025. Yeah, which, if you've got co-location tenants that are signing or renewing leases every 3 to 4 years, rates could be close to double what they paid or what they signed on their last go around for a lease. So there's definitely some sticker shock out there.
No question. That's great insight. And then maybe some things, Andrew, that we haven't touched upon in the report that were kind of noteworthy for you.
Yeah. So liquid cooling, we touched on that a bit early in our conversation. We are in progress on kind of a systemic shift into liquid cooling. We've gone past talking about rear door heat exchangers, direct to chip. We are actively there. I would say that direct liquid cooling is a default installation on new construction co-location facilities. There's a lot of conversation shifting to immersion cooling, but we think that that's still quite a few years out. The average rack densities don't really support immersion cooling at broad scale, but there are test cases for sure. And then the capital market space, I mentioned investor interest. There's just huge investor interest across the investor spectrum, particularly from private equity to invest in the space. But interestingly, the most common form of exposure to commercial real estate for investors, just asset trades, traditional asset trades. A very small number of data centers trade in the United States or even globally each year.
That's true.
So the way that most investors are gaining access to the sectors through equity investments on ground up deals, investing in platform or software systems or operators, or in the public markets through some of the co-location providers that are publicly traded. So, but we do continue to see continued interest in the investor space. The last thing I'll touch on is obsolescence. And this relates specifically to investor conversations, particularly folks that are new to the space. The most common question I get is around, how do we deal with the obsolescence of data centers? And typically I'll hear 10 years referenced, right? Which from an accounting perspective is how the data center might be amortized, but it's really not the life expectancy of the facility. And one of the quickest ways to kind of counterfactualize the statement or the topic of obsolescence is if you look at, for instance, Digital Realty. They have data centers that are 20 years old that are achieving record rents, right? So right there, we're kind of throwing out the idea of obsolescence, but I can get conceptually how you might think data centers are technologies are constantly evolving. It's going to become obsolescent very quickly, like your iPhone, right? It's probably old after 5 years. It needs to be replaced for one reason or another. But the technology within the data centers is constantly being upgraded, and the servers and the software and so on and so forth. And then I'll touch on one other thing. If you think about the value of a data center, most of the value lies in the power, right? If we're talking about the power challenges that we face in the United States and globally. So the facility, if it has contracted power, we can upgrade the facility over time, but the value of the asset, most of that lies within the power and the infrastructure of the facility itself, not the servers, which are ultimately the responsible of the tenant in a co-location facility.
Yeah, no, Great points. And on the capital markets, you make an interesting point. What you're saying is that a lot of the equity is ground up development deals, as opposed to historically, there's been a lot of sale leasebacks of data centers. And you're saying, just so I want to make sure I understand, that is kind of more rare in the US. I would imagine it's globally too, correct? Yeah.
Yes, a very small component. In fact, just to give you some perspective, if I were to pull up sales volume for data centers globally, it's only around like 5 or 6 billion, which is, we're still talking billions, but that's only like 3% of the sales volume of the office sector. So to give you some perspective, a very small component, and these average trades for data centers can easily be hundreds of millions of dollars. So it's way out of reach for retail investors, even some high net worth offices, right? It's data center investment sales is really an institutional game.
Yeah, no, definitely big cost of entry for sure. Well, Andrew, this is very insightful. When you get out the next report, we'd love to have you back. We appreciate your time, and thanks for spending some time with us today. Thank you.
All right, appreciate you. Thank you.
We hope you enjoyed this episode of Tech Trends 24/7 Leaders. To learn more about technology trends, you can follow me on LinkedIn. You can also read my book, Tech Trends 24/7 and the Impact of COVID-19, which is rated a must-read book by CIO Insight. The book is available for purchase on Amazon or on our website, Tech Trends 24/7. When conducting research for the book, I was inspired to see how technology innovation was making a positive difference in people's lives. As a result, in 2020, I founded Beacon of Hope 365. Our mission is to leverage technology to help people in need. More information on the charity can be found on beaconofhope365.org. Thanks again for tuning into this episode, and a big thank you to my entire podcast team, Peyton Pellington, Sal Fortuna, and Carmela Patrone. See you on the next episode.